welcome to the deep dive. You've handed us, well, quite a challenge today. Not just a stock report, more like a full journalistic breakdown of a really niche, really volatile sector.
That's right. We're diving deep into quantum computing pure plays. Specifically, the request was to look at the top 3 high-volume stocks over $10. Rigetti Computing, that's RGTI, D-Wave Quantum, QBTS, and Quantum Computing Inc., QUBT.
Exactly. So the mission is to sift through the basics, the technicals, financials, recent news, find those potential buy or sell triggers hidden in the data you provided.
And maybe have a little fun with a paper money simulation based on the past performance data we have here.
Sounds good. But first, the necessary caution, right?
Yes, absolutely. Yeah. Just a quick reminder for everyone listening. While we're analyzing all this data, the technicals, financials, news, this is purely journalistic and informational. It's based only on the source materials you gave us.
Crucially, it should not be taken as investment advice.
Precisely. Okay, with that said, let's get into it.
Great. So the big picture first. All 3, Rigetti, D-Wave, QUBT, they're in the technology computer hardware space, US-based.
And they vary quite a bit in size, relatively speaking, for this niche. Rigetti RGTI is the largest currently, market cap around $10.2 billion.
Okay.
D-Wave QBTS, pretty close behind at $9.4 billion. And then QUBT is significantly smaller at $3.4 billion.
So still big numbers, but different scales. What's the common thread here looking at the data?
Well, the obvious one is potential versus reality. Massive growth potential. Everyone's excited about quantum, right? But currently, none of them are profitable.
And the volatility. Wow, the recent performance figures are just staggering.
Astronomical is the word. Over the past year, based on the data provided, RGTI is up something like 3,760%.
Incredible.
QBTS, 2,767%. And QUBT, 2,891%. I mean, these aren't typical market movements. This screams high speculation, high excitement.
Okay, let's unpack this company by company, starting with the biggest, Rigetti Computing, RGTI. Last close price we have is $31.46.
Right. And Rigetti's valuation immediately flags this as a speculative play. The price-to-sales ratio, PS, is, it's 12,287?
1,287, that's huge.
Yeah.
What does that actually mean in simple terms?
It means for every dollar in sales Rigetti currently makes, the market values the company at nearly $1,300. It's trading almost entirely on future hopes, not current earnings.
Which makes sense given the EPS, the earnings per share, is negative 76 cents.
Exactly. And the financial health data really drives that home. Profitability is, let's say, challenging. Negative gross margin.
And the profit margin.
Deeply negative. We're talking minus 2,080%, roughly.
So for every dollar they bring in, they're spending nearly $21. How are they still operating?
Well, that's the other side of the coin. Their liquidity is actually extremely strong. The current ratio and quick ratio are both way up, around 41.5.
Meaning they have lots of accessible cash compared to short-term debts.
Correct. And very little debt overall. Debt to equity is minimal, just 0.01. So they have a long cash runway to fund those R&D efforts and absorb these losses, for now at least.
Okay, let's switch to the technicals, the price action. Huge momentum lately. Perf quarter is up 173%.
Massive run-up. And this is where it gets, as you said, really interesting for technical analysts. The RSI, Relative Strength Index, is at 88.47.
Okay, 88. For listeners, what does an RSI that high usually signal?
It's a classic overbought signal. Generally, anything over 70 and definitely over 80 suggests the price has moved up too far, too fast.
So higher risk of a pullback.
A pullback or maybe just some consolidation, yeah. The buying pressure might be exhausted short term. Plus, it's trading over 6% above its 52-week high. That's a breakout, but also potentially a sign of a peak.
Got it. Now, what about news that might trigger buys or sells?
We saw some positive news catalysts mentioned, landing an Air Force award, partnering on quantum networking, expanding into India. Those are potential buy triggers. But offsetting that, the data shows pretty consistent insider selling. Directors selling shares throughout September at prices well below the current peak, like between $18 and $25 roughly.
Okay. Let's do that paper money simulation for RGTI. Hypothetical $10,000 invested 3 months ago.
Right. Based on that 173.57% quarterly gain, the entry price would have been around $11.50 per share. So $10,000 gets you approximately 869 shares.
And those 869 shares at the recent close of $31.46.
That comes out to roughly $27,330.
So a hypothetical paper profit of over $17,300 in just 3 months, a 173% gain.
Wow. A huge paper gain, yes. Illustrates that volatility perfectly.
Okay, let's move to the second company, D-Wave Quantum QBTS. Slightly smaller market cap, $9.4 billion. Closed recently at 27.52 cents.
Right. And QBTS presents a slightly different, maybe less extreme, but still very stretched picture. PS ratio is 422, still very high, but not the 1200 plus we saw with Rigetti.
Still implies a lot of future growth baked in.
Yeah.
EPS also negative, minus $1.05.
Correct. But what's interesting here is the analyst sentiment in the source data. It shows a recommendation score of 1.00.
Which means a strong buy consensus.
Yes, the strongest possible rating. But here's the catch.
There's always a catch.
The consensus target price listed is $23.30.
Wait, that's below the current price of $27.52. How does that work? Strong buy, but the price target is lower.
It's a significant disconnect. It suggests maybe the analysts' price targets haven't caught up with the rapid stock run-up, or maybe they believe that even with a fundamentally strong outlook, the current price is just too high. It's a definite point of caution.
Interesting paradox. What about D-Wave's financial health?
Another fascinating contrast here, D-Wave actually has a very high gross margin, around 82%.
So they're efficient at the initial sale of whatever they're selling.
Apparently so. High efficiency there. But then you look at the operating margin, minus 353%, and the profit margin, minus 1,263%.
Ouch. So huge operational costs are just eating everything up.
Exactly. Likely massive R&D spending, platform costs, it wipes out that strong gross profit completely. But like Rigetti, they seem to have strong liquidity, quick ratio around 42, low debt.
Okay. Technicals for QBTS.
Also strong momentum, though less explosive than RGTI recently. Quarterly performance was about 84%. RSI is 80.69.
Still overbought then, just slightly less extreme than Rigetti.
Yep, same caution applies. It's also trading just fractionally, like 0.7% above its 52-week high.
And the news flow for D-Wave.
Positive catalysts included their Advantage 2 system launch, strong Asia-Pacific bookings growth mentioned, lots of buy ratings initiated by analysts earlier in the year too.
But the insider selling.
Also present, and quite significantly, the data points to the CFO, Markovich, making multiple large sales in August and September. One transaction alone was for 100,000 shares, netting about $1.8 million. Other directors selling too.
Okay, paper money time for QBTS. $10,000 invested 3 months ago with that 83.83% quarterly gain.
The estimated purchase price would be around $14.97 per share, so $10 gets you about 668 shares.
And today, those 668 shares at $27.52 are worth.
Roughly $18,383.
So a hypothetical paper profit of about $8,383, still very strong, and 84% return on paper.
Still a significant hypothetical gain, absolutely.
All right, finally, let's look at Quantum Computing Inc., QUBT. The smallest of the three, $3.4 billion market cap, last closed $21.41. You said the valuation gets really wild here.
Yeah, this one is something else. The price-to-sales ratio for QUBT is listed as 13,162.
13,000.
13,162. It essentially means the market cap is over 13,000 times its trailing 12 months of sales. The revenue is just minuscule compared to the valuation.
Wow. Okay. And the analyst take?
Just a neutral hold consensus, a 2.0 D rating. And again, the target price is below the current market price, around $19.50.
And the margins must be pretty bad.
Catastrophic is probably fair. The profit margin reported is negative 29,000%.
Minus 29,000%.
Yes, it indicates they're barely generating any sales revenue while shouldering enormous operating costs.
Yet, I'm guessing there's a but involving cash again?
You guessed it. Paradoxically, QUBT has the highest liquidity ratios of the three. Current and quick ratios are way up around 88. Virtually no debt.
So they have an even bigger cash cushion relative to their size or burn rate, perhaps.
It appears so. That cash buffer is clearly essential given those operating losses.
Okay, technically, how does QUBT look?
It's lagged the other two recently. Quarterly gain was only 22%. But here's the key difference. Its RSI is 65.
Ah, so not overbought like RGTI and QBTS.
Correct. It's in neutral territory, technically speaking. Suggests less immediate downward pressure from that indicator anyway. It's also trading significantly, about 21% below its 52-week high.
But it's the most volatile. I see a beta of 3.88.
Extremely volatile, yes. That beta confirms it moves, on average, almost 4 times as much as the overall market, indicating higher risk.
Use context for QUBT.
There's a mixed bag in the sources. Some positive news about a government contract, gaining traction in AI. But the big negative trigger recently was announcing plans for a large $500 million share sale.
Dilution fear is likely. That often hits a stock hard.
Exactly. Caused double-digit drops, according to the notes. And then there's the insider activity.
Let me guess. More selling.
Significant selling. The CEO president, Huang, reportedly sold 1 million shares for over $14 million in early September. Other officers selling heavily too.
That CEO sale is huge. Across all three then. Rigetti directors, D-Wave CFO, QUBT CEO. Heavy selling from the inside while prices were soaring.
It's a really strong pattern across the data we looked at. When the people who presumably know the company best are consistently selling large amounts, especially during massive price run-ups, well, it certainly raises questions about their view on the sustainability of those prices.
You have to wonder. Okay, final paper money calculation for QUBT. $10 invested 3 months ago, 22.14% gain.
Purchase price would have been around $17.53 per share. That's roughly 570 shares for $10,000.
And those 570 shares today at $21.41.
Worth about $12,197.
So a hypothetical paper profit of about $2,200, a 22% return. Still positive, but much lower than the others over this specific quarter.
Much lower short-term paper gains in this simulation, yes.
Okay, let's try to synthesize all this. We've got these 3 quantum plays, all showing incredible long-term price appreciation, but very different recent performance and technical signals.
And wildly different fundamentals underneath. The paper money exercise highlights the short-term momentum divergence. RGTI was the clear winner in hypothetical gains over the last quarter. Then QBTS, then QUBT lagging.
But the bigger story seems to be that valuation paradox you mentioned.
Absolutely. All three trade at valuations that seem completely disconnected from current financial reality. QBT's 13,000 PS ratio is just the most extreme example. They're all losing significant amounts of money.
Investors are clearly paying for the dream, the potential future of quantum computing, not the present results.
Without a doubt. Then you overlay the technical caution flags, RGTI and QBTS being heavily overbought on the RSI, suggesting potential pullbacks.
And maybe the most telling piece, that consistent, heavy insider selling across the board, management taking profits while the stock prices are peaking.
It's a major contradiction. You have extreme investor optimism pushing prices sky high, alongside operational reality showing deep losses, and insiders themselves cashing out significant chunks.
So wrapping this up, this deep dive really underscores the state of this sector. Immense hype and investor confidence reflected in those valuations and price charts.
But clashing directly with, profound operational instability, those huge losses, the need for vast amounts of cash, and significantly the actions of insiders.
Which leaves us with a big question, doesn't it?
I think so. The provocative thought maybe isn't if quantum computing as a technology will eventually pay off. It probably will in some form. The real question looking at this data is, given these drastically different financial health profiles, technical positions, sales efficiencies, and insider signals, which, if any, of these specific companies is actually best positioned to scale its revenue enough to ever justify the massive market cap investors have already given it?
A critical question indeed, and one the market will eventually answer.
Absolutely. It's a fascinating space to watch.
It certainly is. Well, thank you for walking us through that complex data, and thanks to you, the listener, for providing the sources for this deep dive. We'll see you next time.